John, good to see you. Climbing interest rates mean good news for annuity buyers. The third quarter of 2023 saw record growth in annuity sales. According to LIMRA, which tracks the numbers, total annuity sales reached $89.4 billion. That is an 11% jump over the same quarter last year. One of the reasons why, of course, the percentage of workers in the private sector with a pension is now 4%. That's down from 60% in the early 80s. Annuities can provide that guaranteed income. So explain why annuities could be helpful as part of a larger financial plan.
Well, as a part of a larger financial plan, and it's another very individualized area of planning, the annuity is really becoming today's personal pension for a lot of people. And, from a psychological perspective, and I've seen this in both clients and prospects, they want to be able to replicate that paycheck that they're so used to that they had in their employment years. So, the pension used to offer that. Now, as you said, the pension is becoming a thing of the past. So people are really turning to annuities because, as you said, it gives them that reliable income stream and, can be a very powerful psychological factor for them in letting them get that peace of mind they deserve in retirement.
Exactly. Yeah, that makes sense. So how have recent rate hikes made annuities more attractive?
Well, I think recent rate hikes have helped make annuities more attractive in a couple ways. Number one, we saw a huge spike in volatility, both in the stock market and the bond market. So people went to flee to the safer annuities as an alternative. With that, the annuities have also benefited from the interest rate hikes because some of those annuities with especially fixed rates are now able to pay out higher rates in their annuities. And, that's a big thing that clients can replace bonds, potentially with the annuity. And, with some of these annuities, they're getting higher rates with no market risk.
So as we, talk about maybe the different kinds of annuities, do the interest rate hikes only affect fixed annuities?
Yeah, so there are three types of annuities out there. There's fixed, there's indexed, and there's variable. And this is, for the deferred annuity options. And, the fixed, as we see there, that's gonna directly affect the fixed annuity. The higher interest rates will give you a higher fixed rate. The index, though, is a variable here. You may see higher caps and participation rates because of higher interest rates. And the importance of that is that allows for you to have a higher potential index gain within those investments. So obviously, that's advantageous for you if you're either trying to accumulate for an income stream or just accumulate with some principal protection in that vehicle.
And since we don't know what the Fed's going to do next regarding interest rates, is now a good time to buy an annuity, or would you recommend annuity laddering?
Yeah, well, there is no good answer to that question. This is really an individualized answer. It's going to depend on a multitude, whether it's your goals, your risk capacity, the ability to take on risk, your income needs. There's a multitude of planning thoughts and questions that need to be answered and thought of before you can really decide whether the annuity is the best option for you.
Right. No cookie cutter answer. So if somebody wants to have that conversation with you to see if it's right for them, what's the best way to reach you?
Well, you can always visit our website, www.gosecurus.com. While you're on the website, we have a ton of videos and podcasts and information that we put out because education is a cornerstone of our practice. And while you're on the website, you can visit the Contact Us tab. And while you're there, you can either schedule a 15-minute phone call to answer any questions or an hour complimentary vision and clarity consultation. If you like doing things the old-fashioned way, you can give us a call at the office, 858-935-6210, and Emily will get you on my schedule.
All right. John, thank you.
Thank you, Erin.